Let's bring in RBC Capital Markets head of global commodity strategy, Helima Croft. She joins us now by phone. Crude oil, WTI now up 10.22%. So these are the highs of the session, Helima, after the market technically closes. So what is the market expectation here? Is it that we're going to get sanctions, that Russia is going to be sanctioned on energy?
Well, the expectation is that we simply don't know whether energy sanctions are coming due to the way this war is being conducted. I mean, the White House has gone to great lengths to say we are giving carve-outs for energy payments. So even though we're putting full blocking sanctions on VTB, Russia's second largest bank, which does the most energy transactions, I think a lot of market participants are saying, we don't know what this is going to look like in 2 weeks. And if Russia continues to wage this war with this much ferocity, with this many civilian casualties, it's only a matter of time before we're talking about full secondary sanctions on energy exports like we saw with Iran. So I think the market is just very, very concerned. Also, you have a number of companies essentially self-sanctioning, saying even though we're not formally being told to divest from our Russian holdings, we're going to do it anyway. We've had Shell, Equinor, BP, Maersk for shipping. There's a lot of refiners that are basically saying we're not sure we want to take Russian crude right now. So I think there is also this self-sanctioning phenomenon, like Russia's becoming this toxic asset. So even though the White House is probably going to come out and reaffirm that they are not going to block energy payments, I think people are looking at the direction of travel and saying, how long is that line going to hold?
And then what? If it goes into full-on energy sanctions, as you say, this is where the market sees it going. What are we talking about in terms of how many barrels of oil come offline for Russia and whether the rest of the global economy can handle that?
I mean, first of all, the White House is probably going to come out and say, we're not doing full energy sanctions now. They're going to probably come out with the list of the actual banks that are being disconnected from SWIFT, and they're probably going to say several of the big ones are not being disconnected yet. But if we do get full energy sanctions, we will then have to look at another SPR release. But more importantly, there's going to be a lot of pressure on the OPEC producers that are sitting on spare capacity to release more barrels onto the market. They're meeting tomorrow. Our expectation is that they're not potentially going to change the formula right now. But if we get to a couple weeks from now, and if there are significant Russian disruptions because of sanctions or Russia withholding supply or companies just saying, I don't want to touch it, then I do think there is a path for OPEC, for Saudi Arabia, for UAE, for Kuwait, the countries with spare capacity to put more barrels on the market. And that's ultimately what I think the White House wants. SPR releases are what you do in emergency circumstances. I think they would much prefer producers with consistent spare capacity to supply in the market. But this is a tight market, and there are real question marks about how many additional barrels are really out there.
Helima, you said that pressure is building on the OPEC producers with spare capacity to raise production, and yet maybe not yet. What's going to change in 2 weeks? Is there a price level that they're going to be sensitive to where they think demand destruction is going to be, more likely?
I mean, I think what they're going to be looking for is there a physical supply disruption? I mean, obviously, if you talk about oil prices, moving towards 120, obviously everyone's going to get very, very nervous. But I do think the catalyst for OPEC coming into the market would likely be a clear physical supply disruption from Russia. Again, either due to sanctions, companies self-sanctioning, and if Russia were to actually start withholding supply themselves, because that is the big wild card. We've had all these sanctions placed on Russia, the most serious sanctions to date ever been placed on Russia, and we don't know yet how Russia's going to fully respond to these economic measures.
Is there a breaking point for Putin on oil prices, do you think, or on oil sanctions, I should say, where we could see some sort of off-ramp? Because it's hard to see what comes next. It doesn't seem like any fast resolution here.
I mean, I think one of the real challenges that he's facing are the central bank sanctions, where he simply cannot access the reserve war chest that he had built up over the past couple of years. So it's an interesting question, like what type of economic pain forces a change in calculations? I'm not sure we know that, because I don't think we know really how far he's willing to take this war and his idea of reconstituting the sort of Soviet sphere of influence.
Yeah, a lot we don't know for sure, Helima, and I'm sure we'll be talking to you again soon as OPEC meets and beyond. Thank you very much.
Thank you so much.